Thank you so much for coming, everyone. My name is Ritesh Banglani. I'm from Stellaris, and I'm hoping that for the next hour or so, uh, Jiten, Sumit, and myself can present you with an informative and interesting session. So today we are going to talk about neobanking, and I'd like to start by introducing our panelists. Uh, Not that they need much of an introduction. So, Jitendra Gupta is the founder of Jupiter. Previously, he was the founder of Citrus Pay and started his career as a banker with ICICI Bank. Um, Sumit Gwalani is the founder of Fi. Previously, he was a director of product management with Google, where he built Google Pay pretty much from scratch. So I'm guessing all of us are users of the product that he created. Um, Today we are going to talk about neobanking. Both Jupiter and Fi have been in existence for the past 3 years or so. Uh, and maybe we can start by talking about what both Jiten and Sumit set out to build. What was their hypothesis before starting their respective neobanks, and who were they building it for?
Having done the payments and lending product for like almost 9-10 years, one of the big realization I had was that none of the fintech, while the fintech's main objective was to sort of disrupt bank or the part of the bank and all of that, but none of the fintech ever managed to do that in India. So, and like I'm telling as a fintech entrepreneur who has been doing this effort for last 10 years or more. So, and when I sort of tried knowing, tried finding out more that why, and I think one of the interesting thing which came out was that when you make a transaction, any financial transaction, uh, you sort of tend to evaluate the best outcome for that transaction. So let's say with a payment transaction, then you see are you getting more offer at GPay or PhonePay or WhatsApp Pay and whatever XYZ, and then that's how you optimize. Similarly, when it comes to taking loans from fintech companies or the banks and all of that, you try to optimize where is the best interest rate, the fastest time, fastest turnaround, and all of that. When it comes to banks, you don't optimize every day, despite they're the worst when it comes to your experience compared to the apps on your phone, let's say your food delivery and all of that. And I think that sort of gave me this personal insight that I think this is like a super sticky category, and but the the problem statement in this category is to win the trust, and so this category also needs lot of investment, lot of patience, long term staying power, and but if you win this category or even you reasonably create a scale, I think it's a long lasting one. And so that was the hypothesis with which we started. Another thing we did is like, and it's like real story I'm telling, despite Sumit is here. So, so, so the another thing which we did when we started was like I personally went out and surveyed almost like 3,000 plus consumers, and I did that over like 4 months or something. Uh, and tried finding out that what is the real problem to solve. And I must admit, I did not get the answer. So uh, that was the thing. And but when I sort of, I'm like, how is it possible that as a consumer, I'm not happy, but still. Uh, I would not say I'm not happy. As a consumer, I felt that I could do better. Like my bank can do better with me, but still there is no answer what to build. And so we sort of went back to some consumers out of the cohort, and we started asking a question differently. So we started asking, because of course I was a biased party to get the right answer. So I started asking, okay, Uber versus Ola, or Amazon versus Flipkart, or Swiggy versus Zomato. And and to my surprise, whichever way the answer came didn't matter, but the answers came in favor of one brand versus another brand. We were like three-pointer arguments. Uh, but when we asked the same consumer, HDFC versus ICICI or X versus Y Bank, the answers were कुछ फर्क नहीं पड़ता सब same है. So I think that this whole affinity or the love towards the brand, I think that was missing in banking. And we said that's the opportunity which we can go after. And that can be done only when you provide a great product, you provide a good service, and you sort of do things consistently well. And I think that is where we got into this business.
I have loads of follow-up questions, Jiten, and would love to get my hands on that report for of 3,000 people. Your notes from 3,000 people. But before we get to it, Sumit would love to hear your thesis for the business when you started, and maybe if you can tell us a little bit of the origin story of Fi as well, that'll be useful.
Yeah, so we built GPay and like was scaling it. The numbers were all looking good. So things were only positive, right? Like I think GPay numbers surprised us so much that like I crossed my OKRs by 3x in the first 3 months. So I don't think anybody at Google believed that that could happen. So numbers was going good. We were like year and a half into Google Pay launch and sort of going good. And I think the realization there was as we did a like ton of stuff is in terms of we had wanted to solve. You realize that most millennials today didn't understand their finances, right? Everybody knew, and like if you talk about everything from politics to Bollywood to music to cricket, everything is discussed in social circles. Finances aren't, right? You will almost never discuss your personal finances. And how do you help people in that journey, right? How do you help people in understanding the finances? That was the original thing, and like to do it. And at that time there were apps like Moneyview, Walnut. They're still around in different forms and shapes. And the idea, the realization there was, can we solve this? But it was very clear that we couldn't solve it from the outside. And so we were like, if you have to solve it, we have to be at the epicenter of people's finances, right? And we kept asking ourselves, what's that epicenter of people's finances? And that clearly was banking, right? Your GPay account goes away, you will be angry, but you'll be fine. You'll continue with the bank account and another thing. Suddenly, your bank is in trouble, which you've seen with a few banks recently, right? Like everything breaks, right? Like, so how do you become at the epicenter of people's finances? That sort of was like, that was a goal. It was like, okay, if we have to be the epicenter of people's finances, to Jiten, like, what's the problem that we are trying to solve? What are we doing it, right? And if you even looked at the space, if I really divide finances for a consumer, it comes down to four things. I have money, I want to put it safely. That's your savings account or current account. I have this money, I now want to use it, which is your payments, use your money. Third, I want to grow my money, that's your wealth. And then sometimes when I'm short of money, I sort of borrow it. You can divide all of finances in these four things. And three of them had been already ton of startups from payments, wealth, lending, everything is there, right? Why had nobody gone and attacked the savings account in India? Why was it was only banks? Yes, regulations is a big part of it, but it's probably hard. And I think Jitain touched it. What we realized is the biggest problem to get there was trust. How do you ensure that it's the hardest route to take in a fintech is try and going and attacking the savings account. And we realize that as we look at people, and if you really tell people that you can provide something which is a lot better, right? And I think I agree, like we did the same research and couldn't find many things. We found few mostly related to customer service. That was the only real things we found. The big thing was we realized, I think horse cart to a car, if you give a better horse cart, it's not going to happen unless you show people the cart. And what we ended up doing was we ended up showing banking apps by making designs and taking it out to people and saying, what about this now? And that got people's attention and said, you know what, this will work. I will try and use this. So it was actually taking prototypes out there and sort of conducting research with it that sort of worked pretty well. So we did that in a decent group. And then it was, once that was done, then it was like, okay, we have an idea, we have designs already. Now let's go start, build the team and go for it. So that was sort of the origins of Five.
Very interesting that both of you figured out that there is a customer problem. Um, Most of us, when we hear about customer problems, we don't think, let's go create a bank. Uh, we think, let's go create an app that does something on top of existing solutions. What was the logic in saying I need to be the bank as opposed to I can be a thin layer on top?
In my case, it was sort of DNA of my past career, right? I was there in the Chrome browser team when we challenged Internet Explorer. I was part of the founding team that built the Chrome operating system and said we'll challenge Mac and Windows. And then, GPay, which was challenging payment players. So the idea was, can we build it better to build it? So like that was the thing that yes, we can go ahead and build it completely and redefine it from start, right? Of course, you have to play within the regulations and say what can we do and what can we not do. But the idea was, if we go to the first principles on, which I like to say of speed, simplicity, and security, right? Like this were honestly the three principles with which the Chrome browser started way back in 2006, 2007. Those three principles have kept me in good stead for almost every product I've built.
I don't know how many people will agree with speed and simplicity as the hallmarks of Chrome browser, but we'll let that slide.
Not now.
But no, thanks so much for that, Sumit. Jiten would also love to hear why you concluded that this problem cannot be solved without being a bank yourself.
Sure. So, so I think ultimate idea of honestly is like how to manage the customer finances better. And within that, if you look at it, as Sumit also mentioned that people took this approach of, let's say, the wallet or money view, where they said, let me read SMS, organize your finances at a single place. And the I see the finances more like health. So in health, what happens is like everybody wants to be fit, but you're lazy to work hard to remain fit. And when I say you, but the most people. And same way in finances, everyone wants to be financially well, or financially better than their previous year, but the discipline is lacking. They are not able to have the same kind of rigor. And I think this is where we felt that you need a use case where you have no choice but to come. And I think that use case gives you the visibility of customers inflows and outflows, and then through that use case you can actually influence the behavior of managing finance. And I think this is why, like, bank account, well, it's a very dull product. I mean, that's a hard reality. But it is also the operating system of money. So, like, your money comes in, your money moves out with the full visibility. You have the longer tenure stickiness. You don't like, and there's an inherent trust in the consumer's mind. And I think that gives you the ability to influence the behavior towards how to manage the finances better.
If I may add one thing, one other interesting thing that sort of has been a realization over time is the first association with every brand sticks with you, right? It's very hard to think of Google beyond Google search. Yes, you have Gmail and stuff, but most people, a few years back, thought YouTube was a separate company than Google was. And in finances, where people have moved from one area to the other area, they found it very hard. It's very simple. Amazon Pay should have cracked payments like anything, right? Like they had all the users, everybody was there. But the realization was like when I'm thinking of payments to a friend or something, or to playing to Flipkart, I'm not thinking of Amazon at that time. I won't open inherently. When I open the phone, I won't open the Amazon app, right? I'll open a pay app in my mind. And so among these four that I talked about, right, like savings account, payments, investments, and lending, where do you start first to get everything? If you start at anybody else, you probably will start faster, but you will then struggle. And our thesis there, which is still our thesis till today, is you start here, and if you can take the hard route and build trust, others becomes easier. People will trust you to do payments, people will trust you to do investments and lending.
This is a very interesting and perceptive point, Sumit, that there are certain natural starting points in our financial journeys, and it can't be built as an afterthought. Uh, a certain recently public company might disagree that banking can be tagged on top, but really perceptive point there about this one. Another Another thing that struck me, the similarities between both of your businesses, is that you were both exposed to a massive volume of financial data and signals coming from consumers. You with PayU and Citrus Pay, and Sumit, you with Google Pay. Did you get any signals from the data that you were receiving, the millions of data points you were receiving every day, that gave you some indications of the customer problem, or was it a sort of de novo thinking by talking to 3,000 customers?
So, for me, I would not say that the insight came from the data which we had visibility at Citrus or Payu, but at least the one macro insight which came was that the adoption of consumer behavior towards these newer products, be it the new payment modes or be it the trying out new financial products. I think that pace surprised me honestly, and I'm like. Uh, if customers are so quick in adopting new financial products, which was not the case back in let's say 2014 or 15 or 16, that means even if you go with a good banking product, the adoption, like otherwise, like honestly, like when we were getting our first fundraise, the first question was that why would anybody open a new bank account? Like, what is the need? You are not going after village population. You are going after the already served population. So, what is the need? And I'm like, I don't have the answer. Seriously. So, so I do not have the firm answer. But my thesis was that I think like is the younger customers will definitely try the product, and after that is your job. And they're saying, why are you so confident that they will try the product? I'm like, I'm looking in the data, the kind of new products people are trying. And like Lazy Pay was a classic case. I'll give you this. So Lazy Pay, when we were launching back in 2017, literally like every bank, every NBFC told us it's a very bad idea. Uh, like I would use wallet. Why would I use a pay later app? And I said that, and I used to ask only one question to the skeptic guy. So, which phone you have, prepaid or postpaid? And invariably, I was lucky. The guy said postpaid. So I said, so why do you use postpaid? That's where this will work. And I think that was the rationale. Now, like we got like 2 million users in Lazy Pay in 2 years without much marketing dollars. We spent like hardly 1.5 million. So it really surprised me. And I think in Jupiter journey as well, when I look at it, and I still remember like to the Matrix guys, I gave this projection that will take like 3 years to reach million customers. We took 10 months. So so it's not like we did anything different. Honestly, we I think it's the customer adoption curve, which that is the macro insight we got. and that sort of helped us.
I don't think anything was there from the Google data. I think it was a lot of talking to people right around you. Just the I think that what I talked about, right? I think just knowing that people don't understand their finances, I think was the key in terms of like how do we solve that.
Got it. Got it. Um, Moving on to a little bit of how it has panned out. Uh, it's now been 3 years for the both of you. Uh, would love to hear a little bit about the customer. Jiten, you spoke about customer adoption. 10 months, you reached a million users. I'm sure Fi has seen rapid customer adoption as well. Would love to hear who is adopting, who is the customer, and what are they using your products for. Uh, Also, how is that different, if at all, from what your original hypothesis was about who will adopt and why? Maybe Sumit,
I
you
can
want to start
I can
first?
take that. Yeah, no. I think uh, luckily our hypothesis has been pretty to what we thought it would be, right? Like yeah, we were shocked with the growth, right? Like 8 months or 9 months with like a million accounts and stuff. But like I think the thing is the group is it's a young segment, right? It's Fi's account is only open for working professionals, so we don't open it to others, which basically means that it's your working professional millennial between the age of 21, 22 to 32, right? That's really the heart of your segment that is there, and these are your first, second, third jobbers in that sense. So still early on, right? I think this was our hypothesis was we can't target folks, our age because they've probably done multiple things. They all have relationship managers or something and not going to change their account. Much harder to change, right? Like I think this we had seen actually a trend across all digital products in India where generally your first things, of course, there may be fanboys for a brand, but after fanboys for a brand, it's more around how your young age, your students that sort of adopt it, and then people who have used to, right? I think this was true for phone pay, Google Pay, everyone out there even back then, and so it was clear that that segment is what we want to, and then we grow as that segment grows.
Yeah, so Ritesh, cohort is same or similar, I would say. So there is absolutely no different. So we basically, I think we must be competing at few places as well. So, but I think if effectively, I think the timing of this cohort in terms of becomes very sweet timing because this consumer set has still not set up their EMIs. This consumer set has still not set up their fixed bill payments. Like otherwise, like if you go to a 30 plus 32 plus specifically, they'll have at least one consumer loan going on, they'll have a couple of bill payments going on, they'll have few subscriptions going on, and after that it become very hard. So but there are pitfalls as well. So this cohort is also very smart in the sense very active in managing their money. So they will invest in crypto. They will invest in equities, direct equities. They'll invest in mutual funds. So they're very educated as such. So so what that means is, and this is like one thing which we're seeing, that the money moving in and out is like very fast. So people move in money. They will do like 10 transactions in a month or more, and they sort of super active with the account. Like in a banking app, generally you would hear like 4 logins a month or 5 logins a month. We see like 16, 17 logins a month. Now that's like very different way this cohort is behaving. So I think that is these are the unique things which we are seeing.
I think one thing that has sort of worked for both of us is I think the fact that both of us went together at the same time, and this was a area that was completely untouched in India, right? So it would have been much harder for a single brand to go and do it. The fact that neobanks came at the same time actually helped all of us. Yeah, marketplace. Right? Because a market was created from people not saying what a neobank is to saying, okay, you know what, this is something I can at least try out and give it a shot. And then let the product take over, right? Like, so I honestly, like in hindsight, it's been actually great to, yeah, the red, like, have it both the long, we almost like a week, months gap. Yeah, so yeah, in fact, you know, I can't get asked these questions at interviews, right? Like what do you talk about your competitors, right? Like, and I joke, Jitin and I talk to each other often. If anything, we are both helping each other, discussing stuff, what's happening with regulators, what's happening at other things. So it's actually good because your real competition is trying to solve the problems that we are doing, and there's room for more players out there. It's not a, yeah, one player takes all. Banking has never been one player takes all. You don't have an HDFC taking all and an ICICI taking all, right? Like if, whether you go in US, that's one segment where it's not winner takes all. It's actually multiple players, and if you do it well together, you can actually build a whole new market out there.
Thank you for the politically correct answer, Sumit. We'll wait for a few drinks before asking the more difficult questions. Uh, but Jiten, you said something interesting. This that this segment is very smart, uh, despite investing in crypto, Um and and that it's a transacting user. It's not as much a savings oriented dormant user. But this has often puzzled me that this is the segment, a 21, 22-year old, like you described, Sumit, um, is likely a user who's not very asset rich, uh, is likely to live from paycheck to paycheck. So you would expect the transaction behavior. But how do if the customer segment is not asset rich, how do you actually build that, build the savings product in the first place, the one that you started with? So I'm still very curious about the choice of segment, because yes, they are early adopters, like you both mentioned. That if you build something unique, they will come, uh, and also they are highly transacting users. But how do you actually, if they don't have the assets, why is it an attractive segment to go after?
I can answer. So I think if you look at let's say HDFC, and so I've seen HDFC journey way early on, because I used to work at ICICI, and I still remember at ICICI we used to make fun of HDFC back then, 2003, saying ki they are going after these younger consumers where there are no savings, no balances, they're full, and 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 literally that was a big learning when I look back. That the banking is a very long term business. It's not a business for quick money. It's not a business for weak hearted people, in my view. It is like you need a at least 20-year view if you really want to make it big. And so from that standpoint, the way I see, and plus as I keep saying, it's a sticky business. So so if you sort of do the job right, in getting the product right, in getting the customer service right, and this segment sort of remains with you 28, 29 onwards, uh, I think there is enough money to be made. Now when it comes to saving specific question, and these are also the habits you create. So while Fi has a very sort of a dedicated product which Sumit will talk about, but we see that we have a product which has a very micro saving product. So where you can save every week or every month towards the goal, and we are seeing people are loving that. People are saying that, okay, wow, through this I can actually save small as well for my short term goals. Well, yes, these guys don't save for retirement, but for the short term goals they've started saving, which they've never learned that habit. So we did a very interesting pilot also, where in US, you have this winning base, the outcome based savings. So we tried that product where we launched a savings challenge. We said that 6 weeks, every week you save $1,000, very small amount, right? And 6 weeks continuously you save, then you are eligible for a challenge, which is like some three random users get iPhone or something like that. And we were surprised, 100,000 users were saving every week. And when we spoke to these users, they had no regret that they did not get iPhone. They were like, wow, I could learn saving because of that, the discipline of saving. So I think these are the habits you can sort of influence.
Sumit,
No,
anything to
can't
add?
agree with Jitin more on like all fronts here, right? I'll just add a story here. Like during an early research, right after having left Google, we realized that one of the biggest problems is the inertia to save, right? So you keep saying I'll save next week, I'll save next month, or I'll put money in a mutual fund next week or the next month, and that next week, next month just doesn't happen, right? So one of the things we realize you need that nudge that Jitin was talking about of like pushing money in, right? Which is Jitin talked about the product which we have is with Fit Rules, where we said let's make savings or investments fun, right? So where it has the standard rules of daily, weekly, but like every time I buy at Amazon, can I put some money aside or can I round up money? Or let's take it to another level and make it more fun, right? Like every time Bumrah takes a wicket, can I put some money aside? Right? It's a rule that may not be someone a user who does all the time, but it will get them to savings. And once it gets them to savings, then they'll try other saving options. So the key is to break that inertia or the nudge. You can keep telling people to do this. So a combination of making rules fun and rewards, as Jitain mentioned, I think the combination of the two does work.
Got it. Got it. On the Bumrah thing, I have my views. You'd basically save a lot of money, but once in a while, uh, not very frequently. Um, I would love to hear from each of you what what the killer feature has ended up being in your products. Uh, what has driven adoption, transactions? Um, of course, you had a set of hypotheses. Uh, you know, you you know, banking is a complex business. You have to build a lot of things, but so far on available evidence, what seems to be working the best? What seems to be driving the this growth of millions of users coming in such a short time? Any views on what has worked so far?
At least I have a very good clarity there. So just removing the friction of trying the product. I think in the bank account, if you look at it, the biggest inertia is was too much of work to open a bank account, and we made that journey uh, so seamless that little in 2 minutes. And you should do that. I know you are entire neobanks, but you should have seen your tweets. So in 2 minutes you can actually try the product, and which is like a highly committed product. And after that, the product has to do the job, right? In terms of your experience on the app, your how you sort of keep the user engaged. But the reason people are coming in is this, that okay, there is so much of buzz, there's so much of excitement, let me try. And cost of trying is like super low.
Very interesting. Where the lack of friction in onboarding becomes the killer feature.
Which is the fact that
Amazing. Sumit?
Jitin has said that, so I can't pick that. So I'll pick my second one there. But I think the for us, I think what we've seen is Fi has sort of become the operative account of this thing where people are adding money, spending it every 2 weeks or 4 weeks, and adding more money and spending, and we see a high rate of transactions, right? Like at a portfolio average of like 20 plus transactions a month is crazy, right? Like I didn't see that numbers in my last stint, right? Like, and that basically, the ability to easily pay and then search any past transaction or stuff, just the convenience has worked way more than we thought it will. But, you know, we thought it will take time when people start adding their salaries and others and then do. You're starting to see people come look for their transactions, and so it's basically it's already become their expense account.
Actually, I had given, fascinating that you talk about searchability of transactions. I don't know if you remember, uh, Jiten had put up, I think, a post on, what are the biggest friction areas. Um, and I had argued very vehemently that one of the biggest challenges with banking is just you transaction search. You can't figure out if I want to go back and remember how much I paid. Uh, I don't know the shopkeeper, the nearby shopkeeper last time. There's no way for me to figure that out, and it's fascinating that that ends up being a killer feature, the searchability of transactions. Um,
I see people searching for like how much did I spend on food last month. Food last month is the search and sort of get there.
that's fascinating, actually. Uh, any you both mentioned these numbers. You mentioned 16 logins a month. You mentioned the very high velocity of transactions. Um, any reasons why that the checking account use case that you both spoke about hasn't happened with bank apps? I mean, if you look at it purely feature wise, the bank apps can do everything that both of your apps can do. And yet, as a simple checking account use case, this is the bank from which I make transactions. Um, that doesn't happen with an SBI, or one of the five HDFC Bank apps. Any hypotheses as to why?
Give my theory to it, right? Like sort of this was the same question that I got asked when building GPay. Why there's payment products, bank products out there? Why do you want GPay, right? Like that convenience, does it count? And yes, it was supported by rewards, but it did count at that time. And I think we're seeing the same thing here. I think the key is getting people to try it, and if you try it, you see the difference, right? Like I think that's really the key. If you try it and spend a week on it and see how your spends are arranged or whatever, or as Jiten said, like you can put small money aside and stuff like that. Once people start seeing the value of it, then there is a lot of stickiness.
Yeah, basically simplicity. So like it's not like the bank apps were not facilitating transactions before GPay, PhonePay, and all, right? They were facilitating, but still the GPay, PhonePay worked because of simplicity. So I think in our case also we're seeing the same thing that like these neo banking apps are providing simplicity to the customers compared to their banking apps, and it's not about honestly, it's not about any specific feature which says that okay, now this app is simple or bank app is complex. I think the way you give the overall navigating experience, the way you sort of arrange their spends, the way you support if something goes wrong. So I think all of those kind of stuff.
Got it. And to prove that I'm a loyal user, Jitin, I'll talk about my favorite feature in your product. Um, um, Jupiter has a feature where the debit card number is actually stored on the app, and with one click, you can actually copy it for pasting anywhere. I find myself using that debit card over at least any other debit cards I have only because of that feature. Because I don't have to pull my physical card out of the wallet. I have the number right there. So I can totally relate to the simplicity argument. Um, any negative surprises, gentlemen? Any hypotheses that you had that this is how the consumer behavior uh, would evolve, and it ended up not being true, where you thought the consumer would adopt something for so and so reason, and it ended up not being
I can answer for us. I think I would say service. So I thought the product is digital, and the product is quite intuitive for customers to not contact us. And 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 I must say that everything is there in the app, but customers still want assurance. Assurance that uh, okay, is my money insured as per RBI 5 lakh deposit thing? Now we put a bot which says yes, 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 all of that, but they still want to contact, or what are the charges on debit card? We already tell when the customer orders debit card there's no charges and this is like free and all of that. But still, I think, and because of that, we have to, and of course, the expectation is higher, honestly. So the expectation is like they know that if their transaction, let's say Flipkart refunded, they know that it will take 3 days to come or 2 days to come, but they'll still keep pinging us saying that, oh, you're a neobank, it should come instant. So I think that these are the, I would say, surprises, and honestly, like I never uh, anticipated that we'll have to really invest heavy in the customer service team, and the customer service systems and processes and all of that. I thought if you do a very good job via product, you can be lighter there. That's not the case.
I'll just add one example, which I think is true for both of us on the service side, right? Like, I never really believed there will be so much request for checkbooks. I thought checkbooks was done in history, right? Like, why, right? And I think we've discussed this together in terms of like what are the various reasons that you require a checkbook. Everything from you need cancel checks to other use cases, insurance you need a cancel check and so on, and it was mind-boggling. We definitely didn't prepare for that one, right? Like the checkbook request and the demand for it. We were like, okay, we'll manually take care of it, but you realize you had to automate it out at the scale the requests were coming in.
Amazing. Any other negative surprises? So, so
I, I think you know, trying to think through it, not much. I think hiring has definitely been like but I think who is it not for, right? Like in that sense. But other than that, I think it's been fine.
hiring के लिए तो बहुत गम भुलाने पड़ेंगे इधर. Sorry, I slip into Hindi once in a while. Actually, the service surprise reminds me of one of my favorite stories in banking. Um, when I got my first bank account, it was a Citibank Suvidha bank account back in the late 90s. And they had the same hypothesis as the both of you, that if you create a good product, the customer doesn't want service. They created a product it was a very, very good product. Yeah. But then they said, we will, to enforce no service, we will charge you 100 rupees every time you walk into the bank, thinking that nobody will walk into the bank. A couple of years later, one product manager said, hey, this is our most profitable line of business, 100 rupees to walk into the bank. So I guess Indians do want that physical touch point, the talk to a human being. My sense is it's also a factor of trust, that you don't actually trust a brand till there's a real human being behind it. So interesting. Um, what if you were to launch your next segments beyond the young millennial, not even millennial now, 22-year-olds are Gen Z, but the young early career professional is the segment that you've both gone after. If you were to think about the next segment that is ready for neobanking, what segment would you pick and why?
You are asking the business strategy.
Hypothetically speaking.
So, so first of all, like as a caveat, I would say that I don't think so. We have plans to move into any new segment for next 3 years also. So that's very clear. But I was just coincidentally, I was just thinking over it as a like a favorite pastime, and I actually thought NRI segment is a very good candidate for a neobank, because that segment, if you look at it, my both brothers are NRI, and whenever they come to India, in their agenda, they're like 2 days or 1 day visit to bank, 1 day to the visa office. So like they come for 7 8 days, and these 2 days are fixed. And I'm like, and I try finding out like why do you go to the bank? every time you come, you spend half day with the bank. Like, what do you do there? And they're like, नहीं statement चाहिए, कुछ तो वो बैंक आरएम ने बोला था आके मिलना है, and all of that. So I think that is the thing which I feel is a very good candidate for the next neobank.
So, because sort of the talking consumer, let's go a little bit away from consumer in a sense, right? Like we've got a bunch of neobanks in the SME space, right? But just as our business has grown, I have realized how difficult it is to deal with business banking ourselves, right? I think there's a huge market to just nail business banking fully, not SME beyond the SME segment, right? The kind of stuff that's required by compliance and the kind of stuff that's available right now. Today, you only have some of the big banks provide you that, but honestly, can be done way better.
Excellent. I think our team should take note of which areas we want to invest in further. Um, uh, how has it been dealing with the banks at the back end? I mean, obviously, we are required by law to work with banks. How has that experience been? What is the bank looking for? It's clear why you would want to partner with the bank. Why does the bank want to partner with you? And you know, as you think about the future, how do you see the bank enabling you in achieving that future?
So I can take
Yeah,
a start
go ahead.
at it, right? Like I think we worked and we started with Federal Bank as a partner, and I think honestly, like it I worked with bunch of banks during the GPay thing and before, but like I think real working I think was surprisingly great in terms of what's a fintech looking at, right? The neobank or other, you're looking at like, can I tweak some stuff to make the consumer experience better, right? Like, are you open to changing APIs? Are you open to changing certain flows, right? So far as we are within the regulation and doing it rightly. And I think that honestly, has been great with Federal. I think we've practically rewritten most APIs out there, and still doing that, right? The thing sort of continues in that sense. Of course, like with banks, it takes time to do something. It's not there, but like I think the openness to say, you know what, yes, we are open to say and like co-define APIs that will actually add value. I think from day one was super helpful. I think without that, we probably wouldn't be here. In terms of being able to, even a simple thing, right? Today, for most banks, you have to go and change a mobile number. You have to go to the branch, or you have to go, to the ATM at a minimum. Like being able to change your mobile number or email address right from the app itself, while small, like requires a bunch of changes across stacks for banks also, right? So I think being open to say yes, we'll go ahead and allow that feed, work with you, figure out the security things in play and get that done has been great. To your point of like, why this for partner banks, whether it be federal or others, I think it's see for this mid-segment banks, I think it definitely helps them to get a lot more customers in there. Uh, yeah, but I think that's sort of been I've been pleasantly surprised there.
Actually, would love to drill down into this a little bit, Sumit. What is the bank really hungry for? Is it new customers? Is it new deposits? Is it new loans?
All of them,
All.
all.
Sure, but I mean, your strategy has been to drive transactions. Not necessarily drive deposits to that extent. Does it tie with the bank's own strategy? Does it tie with the bank's own objectives in partnering with you?
I think you know Jiten mentioned this is like a long game, right? It's not a 3 month, 6 month, 12 month, and we've already seen with our cohorts from like 9 months back or 10 months back are doing way better than our cohorts from 6 months back, and much better than the 3 months back, right? So it's almost like, you try an account, you heard it from somebody, and you're like, I'll try it account, use it. As I keep using it with little, over time, it sort of starts doing, right. Like, it's patience becomes a key player here, and you just have to wait it out, and we are seeing that numbers then change once a cohort is established for a long enough time.
Understood. Does the bank worry at all about the fact that you have pretty much white labeled the bank? Uh, when when I think of having a Fi account or a Jupiter account, I don't really care that it's Federal Bank behind it, right? It could be any other bank, and I would still be happy to use your services. Uh, how does the bank react to that in a way? And sorry, we are amongst friends here, so feel free to be politically incorrect. In fact, I encourage you to be politically incorrect. But how does the bank react to getting white labeled in a way? And for either of you,
Yeah,
Go
so I would
ahead.
say that like the Federal is like a mid-sized bank, right? So it's not one of the top four. So they know what is their strength, and they know what they're not good at. So like in this forum also, let's say if Jupiter 5 were not there and Federal came and pitched to you, I'm not sure how many of you would open the Federal account. And they know this fact. And I think admitting the fact that this is reality gives you much more real picture of what to expect, what not to expect. And I think that is that has brought balance in the equation. Otherwise, most banks, even like smallest of the bank, they feel that they have the license, so they can dictate any terms with their fintech partners and all of that. I think fortunately, Federal has this opposite mindset, so they know the reality and they try to balance it out. So that's the way I see it.
before we end, I did want to ask one very important question to both Sumit and Jiten. How will neobanks make money? So,
I know you are influenced by current wave, right? Where everybody is asking, "कि revenue किधर है?" So, so I think in my view, the business model, be it neobank or bank, the business model is almost similar. So where you make revenues on names, you make revenues on fee income, interchange, and all of that. So fortunately, in the banking, I would say the good part is the business model is solved. So the way I look at it is, why innovate there unnecessary when there's already solved model. So that's one. And second, I think our foreign counterparts have also done good job in creating non-traditional revenue lines by giving additional value to the customers. And well, that's not proven in India, but we feel we would try that and see whether that also could be added. But baseline business model is similar to the banking.
your view, Sumit?
Nothing much to add there. I think Jiten covered it well. I think that also the way to think of it is, we are banking plus plus, right? So there are additional revenue models when it comes to investments and other stuff that have potential to add here, in that sense, right? Like, so we are beyond the couple things or three things you associate in the bank, and those are of course there, but there are other places where revenues does come into play. They might be smaller to start with, but definitely have a huge potential to grow.
So, if I may push a little bit on this, gentlemen, won't you be hobbled by regulation while dipping into the banking business models? Um, for example, when you start lending, it will be Federal Bank or whichever bank at the back end that will lend. Where will that additional margin come from? Uh, because the bank can at that point argue that this is my customer. You are no longer a DSA for that loan. So, would just love to double click on that. Since you mentioned NIMS, where would the NIMS come from?
Jupiter is already an NBFC, so you
Yeah, so I
get
would
better to
say
talk
so.
about
So
it.
your assumption is that we will always be the front end or the DSA equivalent model. That's your assumption, which is not true. So I think we feel that for the bank account, you don't have a choice by design or by regulation. So you have to have your money parked there and all of that. But when it comes to giving out money or giving you the investment products, then we can be our own manufacturer, own products, own service without depending on the bank. Of course, where it will make sense to partner with the bank, we'll partner with the bank. But where it is making sense from economic standpoint to sort of offer own products, we will do that.
Understood. Yeah. So just to add, like we are all like all of us, like whether it's an NBFC license, a RIA license, whether it's a third, fourth license, a lot. Both of us are probably in that game. So that there are products where we will provide, and the products we'll provide on behalf of our partner banks.
Understood. Understood. Uh, so the products you could or are manufacturing your own products as well that you could cross sell to your users. Got it. Great. Well, I realize that we have overshot our time. So thank you so much, Sumit. Thank you so much, Jiten. This was an incredibly insightful session. Uh, uh, I hope you will be around with us for a little while longer and mingle with the group over drinks and snacks. Thank you so much. Thanks, everyone.
Thank you.